Thinking of buying a second home in the US? Whether it's a vacation house, rental, or an upgrade, there are 9 things you must check before you sign. Stay with me for the next 15 minutes and I will walk you through a practical checklist so you don't make an expensive mistake. I'm Barbara Curran, a realtor working with buyers across the US. I help buyers evaluate properties the smart way with financial clarity and realistic expectations. At the end of this video, I'll tell you how to get my free second home checklist. The fastest way to reach me is via WhatsApp. Link in the description. Quick overview. We will cover 9 factors: purpose, finances, mortgage rules, taxes, location, and market, zoning and future land use, inspection and hidden costs, property management and exit strategy. I'll give you real examples and a short calculation so you can apply this today. First question: why do you want this property? Is it for family vacations, a rental for extra income, a long term investment to flip later? Your answer completely changes which neighborhoods to look at, the mortgage you choose, and the tax implications. Second homes cost more than the purchase price. You will need down payment, closing costs, plus 3 to 6 months of reserves for mortgage, taxes, insurance, and maintenance, especially if you plan to rent and face vacancy periods. Lenders treat second homes and investment properties differently. A second home you occupy part time often gets better rates than a pure rental. But minimal down payments and debt to income checks change. Talk to a mortgage broker early. Tax rules are key. Your tax benefits differ if the property is a second home versus a rental. Also, check property tax rates, local special assessments, and costs of insurance. Hurricane, flood, or higher premiums for coastal areas can add thousands per year. Don't buy on emotion alone. Check job market trends, school ratings, seasonal demand, and if it's a vacation market, and overall supply. A strong local economy equals better appreciation and lower vacancy risk. Zoning and future land use plans can change property's value. If future development is planned nearby, it might increase value, or it might block your view or create traffic. Check the city or county planning maps before you buy. Inspections are non negotiable. Roof, HVAC, foundation, drainage, and septic systems in rural areas often hide big costs. Always budget for immediate repairs and a 10 to 15% renovation contingency. If you rent the property, plan who manages it. Self manage for higher margin but more headaches. Hire a property manager for convenience. Typical fee is 8 to 12% of the rent. Also plan for tenant screening, turnover, and emergency repairs. Have an exit plan. Plan to sell in 3 to 5 years or hold long term. Liquidity matters. Some markets are thin. Think worst case scenarios: market downturns or prolonged vacancy. For example, let's say the purchase price is $300,000 with 20% down, that's 60,000. Then you have your mortgage payment, property taxes, insurance, and if you rent, about 10% for management, plus around 5% vacancy. When you add it all up, your cash flow might be positive or negative. That's why you need to run the numbers first. Recap: define purpose, check your cash reserves, talk to a mortgage broker, consult a CPA, research location and zoning, never skip inspection, plan management, and have a exit strategy. These 9 checks will keep your second home from becoming a financial headache. If you would like help running the numbers for a potential second home, message me on WhatsApp. At WhatsApp, write, "Hi Barbara, I need help with second home numbers." I respond quickly and can review your scenario or schedule a short call to walk you through the options. You can also DM me on Instagram at Realtor Barbara Curran if that's easier. I'll be happy to help.